Hello and welcome to Lipper's Fund Flows Insight Report. I'm Jeff Tjornehoj. For the weekend of October 3rd, 2012, the conventional mutual funds industry had outflows of about $8.5 billion, most of that taking place in money markets. Let's take a look at the macro groups and see where that activity was. Starting off at the top, equity funds had outflows of $2.4 billion. Taxable bond funds took in $2.4 billion. Muni debt funds had a solid week with about $520 million in inflows, and money market funds posted outflows of $8.9 billion. Well, even though it was a down week for equity in terms of performance, the reaction by equity fund investors seems a little outsized. With about $2.4 billion in outflows, they've had outflows for 10 of the past 11 weeks, and this has come despite the Dow getting close to that 14,000 mark. We had a lot of broad losers this week in terms of flows. A lot of the standby core type products, from large cap value to small cap growth, all posted outflows. The one exception was mid cap core funds, and that was probably product driven. The only real bright spots on flows this week for equities were in commodities funds, global real estate, and again the mid-cap core area. So with a few exceptions, some investors filling out the corners of their portfolio canvas, there really wasn't much to speak of in terms of inflows. Although with $2.4 billion in outflows, that's still a relatively light week for equity fund activity. Let's take a look at equity ETFs now. In this group, again, we saw relatively flat flow data this week. It was about $440 million out. Again, $440 million is a drop in the bucket for the ETF market, and on a net basis, there was not a whole lot of inflow and outflow activity. We saw IVV take in about $1.4 billion for top honors for inflows this week, and it was followed by the Ultra S&P 500 ETF, which took in about $406 million. But at the other end, outflows tended to be about the same as the inflow numbers. We saw the mid-cap 400 lose about $869 million, while the QQQ also saw outflows, this time about $709 million. So overall, between the inflows and the outflow data, there wasn't a whole lot to speak of in terms of anything interesting this week. The next group we'll turn our attention to is taxable bond funds. Again, they took in about as much money as equity funds lost, about $2.4 billion. A typical week for them. They've had about $3 billion on their 4-week moving average, so they're definitely back to their old game again. High yield funds, curiously enough, saw about $429 million in outflows. That's probably not a surprise considering how risk-averse investors suddenly became this week, taking money out of their equity funds despite some decent movement in the market over the past few weeks. They're turning just a little bit more risk-averse. So not only did high yield funds see outflows, we also at the other end saw U.S. mortgage funds take in money. They were one of the best performers in terms of flows this week, taking in about $548 million. So overall, a pretty solid week for taxable fixed income funds. Investors are standing by mortgages and letting go of high yield funds, albeit at a very slow and measured pace. Let's turn our attention to fixed income ETFs. And here, again, another quiet week for ETFs, about $150 million in inflows. We saw Treasury and emerging markets take some inflows, while high yield and currency ETFs had outflows. Again, very small numbers on either side here, so really not a whole lot of activity in this spot either. Next group we'll take a look at is municipal debt funds. They had about $525 million in inflow this week. That's a pretty typical number for them over the last several months. Maybe it's getting toward the lighter side of things. For the most part, we saw high yield funds take in about $109 million, so there's a difference right there between taxable and tax exempt, with the high yield munis taking in money this week. We also saw the intermediate munis take in about $65 million. After that, the flow numbers drop off pretty small. So overall, light activity numbers. If you liked municipal debt last week, you stuck by it this week. Not a whole lot of buying or selling activity, in other words. Final group to take a look at is money market funds. This data reflects quarter-end activity for institutional investors, which probably means some quarter-end tax payments made by corporate treasurers. Most of the selling activity done by institutional money market fund account holders. They let go of about $11.7 billion, while at the same time retail money market fund investors put to work about about $2.8 billion. So overall, a down week for money market funds, but just reflects their nature as a cash vehicle. So that'll do it for this week. Please join us next week where we'll take another look at mutual fund and ETF flows activity. And please join us online at any time at www.lipperusfundflows.com. And thanks for joining.